Oh, am I muted? There we go. All right, what's up, everybody? Happy summer Sunday. Muggy, scorching, disgusting heat in New York, of course. Yeah, I had myself muted there for a second, but thank God I caught that. Let me know if you guys can see the screen, right? Because I see it here on YouTube too. So, okay, let me X this out now. I don't need this. Bink. How's everybody doing? Seemed like a quiet weekend, right? Other than usual Trump news. I didn't see anything too dramatic compared to some of the stuff we've been dealing with. Thank you. Okay, very good. We'll give another minute here. Let people hop on. Then I'll run through some of the stuff we usually look at. So again, today we're open to social media. I had to cancel last minute the Thursday webinar, so figured I open up the Sunday webinar to everybody. So welcome, Twitter. Oh, you know what? I should post it on whatchamacallit too. Hold on. How do I do this? Copy. Where is it? Oh, no, wrong button. Copy link. There we go. Struck, your rays are up my ass. Excuse my French. Your red hot rays. Good, Bruce. Hanging in there, no complaints. Still breathing, and that's a plus. Right? There's a lot more we could complain about out there. I mean, hell, people thought we were on the brink just a couple weeks ago. Oh, it's disgusting to hear. It's so horrible. We went through rain and dampness, which kind of just ruined all that spring season. Doesn't even exist. And then it goes right to this muggy, sticky, it feels like pea soup out there. It's just horrible. And the yard, I can't even enjoy the yard. I go out in the yard with the dogs. There's gnats all over the place, mosquitoes. Like the only place you can be is literally on the beach where you're getting that breeze. Otherwise, forget it. That's the one perk where I'm at. I'm by the water, so I get that nice breeze. I go into like town. Oh, I dread getting out of the car, out of the air conditioning. I hate mosquitoes, man. They love my blood too. They eat me up. See, I should have. I'm usually careful like that. I should have been careful. I was mocking the Rays early on in the year using the Yankee spring training facility, and now they're going to be a thorn in the side all year. But they usually are anyway. They usually are. All right, so welcome everybody. We got a really, again, quiet. I don't like to use that word, but we got a short week this week ahead of the holiday. So it should be quiet, but what you have some interesting economic data that a lot of eyeballs are on this week, job related, and a lot of this market, that speculative risk appetite out there has really been one of the main drivers up until this point. And these holiday weeks are notoriously known for kind of that speculative appetite, that risk appetite. You get a lot of these smaller names. a lot of retail participation, right? Quote unquote. All the big shots are away for the week and stuff like that. But you get these dead spots. You'll get quiet time during the day, but especially the way we've seen the last few years post-COVID, the summer quiet markets are not as quiet as they used to be. Used to be like you come in a summer Friday, you see tumbleweeds. But now higher retail participation, especially with the options market, there's always some action. But it should be on the quieter side. Hold on, let me mute this guy. I forgot to mute this guy. Oh, where's the mute? And because of the Fed and kind of the stubborn Fed, I guess we should say, waiting on some signs of the job market cracking, any slowdown that Powell can hang his hat on as an excuse to cut rates. So a lot of eyeballs on the job number this week. Inflation has been tame. Yeah, again, Powell's concerned. He claims he's concerned about inflation perking up off these tariffs down the line. Who knows? But any sort of slowdown in these job numbers, you got to believe Powell's going to cut. And September, more than likely, they're already starting to price that in. So should be interesting on that front. The market right now, they've kind of been pricing in cuts of recently. Like I said, more of the September meeting than anything else. But the Fed cuts are not driving things here. You got a lot of other things that we've discussed and we'll look at again today, from liquidity, from underexposure on the positioning side. So you got a lot of other factors that really have been driving equities. And, they're still there. They're still there. Again, not to the magnitude that we were seeing coming off the lows back in whatever that was, April. But you still have pretty significant underexposure in a market that has just breached new highs. And, while obviously anything can pop up at any given time in this crazy world we live in, right? Barring a calamity, there's a high probability that a lot of these pullbacks are going to be short-lived, and we're more inclined to see some of this underexposure money be put to work on any dips and pullbacks until they bring these exposure levels up. You hear kind of the chase, right? You hear a lot on social media, even on CNBC, Bloomberg, they're talking about this chase, but it really hasn't been aggressive. It hasn't really materialized. This last week, you saw a little bit of a bump up in some of these exposure readings we look at, but you haven't seen an aggressive chase. And what we certainly haven't seen is kind of this full participation, quote unquote, real bull market that we certainly have a shot for. Now, maybe again, like we've discussed, maybe rate cuts is that missing link, right? And we'll talk about that a little bit more because that's kind of what I'm looking at here, and I'll tell you a little bit more about that. But it's been in these pockets that we've seen more bullish price action than not in for quite a while, right? AI related, space related, nuclear related, that sort of thing. Okay, so that's been the main driver here. And I think again, the risk is that if things start to turn more positive than expected, funds and players aren't positioned for that. All right, and that's a problem for them. Okay, now they've gotten away with it at times because again, the economy, there really hasn't been any growth there. You haven't had a favorable Fed. You had Trump bringing in these tariffs, but little by little, right? You get Middle East conflicts. You got a bunch of different things going on, but little by little, if these things start to turn more positive, right, and are more in the favorable camp, that's where you're going to see a lot of the other stuff get involved. And now, granted, these hot spots and hot pockets are probably going to be a leading theme right? Because that's where all the growth is. But at the same time, everything else has been pretty much ignored in a sense. And that will change as sentiment improves within, in regards to the economy and stuff like that. So again, we'll spend a little time talking about that, but I wanted to run through a few things here because I think what we have a trap of falling into, and I talked about this during the week in the steam room, right? You always get the question, what do you think about the market? Is it going higher or is it going low, right? Are you bullish or are you bearish? And it's kind of always looking at extremes, right? If you're bullish, you got to continue to buy up here relentlessly. And if you're bearish, you have to expect some sort of calamity and collapse, right? And this market spends a lot more time in the in-between, okay? But one thing I'm really careful about, and I was stressing to Steam Room members, if you remember last week, is because of this favorable backdrop we have, and while it remains favorable until that changes, we don't want to get too cute and try to get too clever to ruin and get in the way and jeopardize taking advantage of that backdrop, right? So you don't want to micromanage things to the point where now you're taking these little paper cuts and stabs trying to predict the day-to-day gyrations, right, of equities when you have a favorable backdrop like we've had. Right? So until we see positioning a lot more full than it is, right, until we see some of these sentiment gauges, big picture sentiment gauges start to change significantly from where they are, the liquidity front, right, financial conditions, all these things, I think the main thesis is we want to try to take advantage of any pullbacks and look for opportunities, especially on the more tactical side, right, for trading opportunities. And, big picture wise, we want to look for names that are still at decent risk reward spots, whether they come off pullbacks or they've been consolidating, right, or they're breaking out and catching flow. But we want to be prudent about things, even though we may be bullish that we're not just chasing the same name that's up for 2 straight months here because we feel bullish about things, right? Because there's a variety of things that can play out even in a bullish scenario, right? And just to give you an example, I don't want to spend too much time on it, but you can get rotation, right? And we haven't seen it in a long time, but if you remember, even in bullish times, you get where some of these fatter areas of the market, which are leaders in a sense, they kind of get chased and crowded into, and then eventually they become significantly overextended to the point where they cool off and some money starts to rotate out of those names, allows them to catch their breath and move into other areas of the market that have been neglected, right? And rotation doesn't have to be this major dramatic rotation that is going to change the landscape for the next 5 years. It could just be rotation for the next month or two that allows some of these hot names, right, leading groups, to catch their breath and digest their gains while people and funds are looking for other areas of the market where they find value. Okay. So again, these are scenarios in a bullish case where, right, if you're chasing things, you can cost yourself money. If you're not paying attention, you can opportunity cost, not take advantage of some of the rotation that we might see. All right. So these are things you want to pay attention to no matter how bullish you may be. All right. And I think people have a tendency to forget that because, again, they look at the market and just plain vanilla, right? Are we going up or are we going down? Plain and simple. So I like to, remind myself of that. I don't want to get too cute. Right? I don't want to get too cute in where I kind of get away from my main thesis here, and that's trying to take advantage of a bullish backdrop with underexposed positioning. So that's kind of the main line that runs through all of this here. That being said, okay, I'll show you some of the things we look at from day to day, week to week, and why, I think kind of we're nowhere near that exposure where it would raise a caution flag, okay, and why, if things start to fall in place, we may have a good possibility of seeing a decent bull trend come out of this, and not that late cycle blow off melt up that everybody's just assuming the rally results in. All right, so let's look at some of these things. Right, big picture indicators like this. Okay, and DB had a great note. Let me go to DB because they always have a great note every week. But let me go to it just so I'll go through all of them because it's worth it. Hold on. Do I have it here? Bear with me. Here it is. All right. Their title of their note this week is "Market Hits New Highs, but Positioning Still Low." Okay, and that's kind of what I'm touching on here. So here's their big picture or consolidated equity positioning indicator. And as you guys know, I like this indicator a lot because there's a lot of different things that go into it, right? It's not just survey sentiment. It's not just futures positioning. It's not just options bias. It's all of it into one indicator, okay? And where we would get worried, okay, at the least, it's kind of where we were, if you were around and you remember, we were stressing some concern into the end of the first quarter of this year, right? Like February, March, and we were at an elevated level as they're showing here, okay? Now, again, could we have got higher from there? Of course, but that adds risk to the picture, right? It doesn't decrease the risk there. So we're nowhere near there yet, right? According to this indicator in particular, we're not even at neutral, technically. Okay, so we still have a decent way to go on the positioning and sentiment side, according to the measures that DB looks at. What else? They got a couple of discretionary investors are now neutral, while systematic strategies remain underweight as a whole from the February peak. These are sectors. Here are the positioning amongst sectors. And I think this tells a lot about what we're kind of hitting on here, okay? You have these pockets within sectors, right? Like space, where's that fall? Nuclear, right? Where's that fall? They're kind of these little subsectors. And that's where all the really, if you want to call it exuberance, has shown up. That can get you worried at times when these things get overheated, okay? But as a whole, right, sector-wise, you really, you're not even close to being at full positioning. Utilities, one of the more bullish sectors, and that has to do with kind of that data center play and stuff like that. But you can see there, that's not even bad. Consumer staples, which is a defensive sector, that's the only other sector that's showing net long, right? Then you got consumer cyclical, right? That's negative. Energy, which you saw a chase from hedge funds specifically into the Middle East conflict, and then they got run over, still big picture-wise, negative. Mega cap growth in tech, that's been one of the hot areas, right? You've heard me pounding the table on just caution in prior months because just way too many bulls there, right? And you guys remember, like, I was early on screaming caution and bringing it to your attention, but that's besides the point. Right? I'm not Nostradamus. I have no idea what the future looks like. Just based on positioning, you had positioning maxed out at points there, okay? And what we've seen is a breakup of kind of that Mag 7 trade, right? They really busted that up nicely. You had Microsoft dead money for like 9 months. Mag 7, like Netflix has been bullish, but names like Tesla haven't done well. Microsoft hasn't done well at times. Google was dead money. Amazon's been quiet. right? So all that now, the one sector that usually would be crowded here is not even crowded because of that. Okay, far from it. Industrial cyclicals, forget it. Nobody wants anything to do with that sector because that's economically sensitive, right? So maybe when rate cuts enter the picture, maybe when the Fed starts cutting rates and now they look past some of the sluggish growth, okay, you start to get attention there. But to this point, no interest outside of the real leaders, a Caterpillar, a Deere, right? And they got a little sprinkle of the AI in those names as well, believe it or not. Real estate, that's strictly rate cuts, right? The housing market has been dead, completely dead. Housing stocks have been completely dead. Financials, believe it or not, over the last week or two, you had some really aggressive buying, especially amongst the hedge fund crowd in financials, okay? But big picture wise, and you've heard me talk about this for what now, 2 years? Big picture wise, the financials are still significantly underexposed amongst funds. Okay, and you see it here, sector positioning wise, still negative, even with this aggressive chase over the last week and a half, 2 weeks. Right? Look at a JP Morgan, look at a Goldman, and a lot of the buying has been in those leaders primarily, even when they do buy them, right? We just started to have seen signs of some of the underbelly being bought, like a Capital One Financial, a Schwab, which we've talked about, okay? But again, net financials negative. Healthcare, this is one of the more bullish sectors amongst hedge funds. That's where they've been buying the last maybe couple of months. They got hit over the head. But have you looked at some of the healthcare names? They've been a disaster, a complete disaster. And materials, again, because the global economy has kind of been sluggish and you've had inflation come in, right? A lot of these material names just can't catch a bid. They're just starting to now. And if you get this rate cut cycle underway, that could be a huge boost for that group. Right? And that and healthcare now are actually tied for, if you're a contrarian, the most bearish amongst positioning. Okay. Let's see what else I get over here. U.S. equity fund flows. This is another thing, right? Like this was a concern coming into this year. Okay. Do you remember the hype? Right? Just think about it. Put yourself back into that place. Trump leading in the polls, okay, pulling away from Biden in the polls, and that whole Trump trade being priced into the market. You remember that? You remember the amount of money that was coming into these funds, the fund flows? You can see it on this chart. Look at this. All right? That's a concern. Right? That's a concern. It's hard to get bullish when fund flows are all the way up here. Okay? Can the market continue higher? Can fund flows still come into the market? Of course they could. But at some point, when that changes, you're going to get some sort of drawdown in the indexes. Right? It's going to weigh on the indexes just as it does on the way up. So what you had off this tariff correction in April, you had a really nice rinse on fund flows. They've still been negative. I think last week might have been the first positive week. All right. So even fund flows, the risk appetite amongst these equity flows into these funds haven't been all that bullish. Okay. Here are some of the levered ETF flows, right? Same thing. Right before the correction, this is what we were looking at. You can't be bullish into that. No matter how bullish you may feel about AI or whatever, you're seeing things like this. You have to take a cautious approach. All right. Now, completely different tune. And this is nothing new, guys. We've looked at this since from in April when the market was still in correction. But what I'm showing you guys is even though that this market has come a decent way off those lows, okay, and according to technicals, we're overextended. We could use a rest. Okay, big picture wise, you're still not in any area of concern, nowhere near it on the positioning side of things. All right. So I think DB really hit home on a lot of the stuff we look at. So I think that was a good place to start. Systematic funds have kind of been just stuck here, right? They were max short, if you remember. Now they're slightly long, neutral, let's call them as a whole. And McElliott from Nomura had an interesting note here regarding these vol control funds, how they have a ton of equity they need to buy. Okay, that's how underexposed they've been. What I like to look at is this. And those of you in the steam room know this chart we look at every week. So this shows vol control funds and sensitivity to a 2% market sell-off, right? And what you usually see when they're all in, right? If they're, in other words, if they're max short VIX, okay, you'll see this thing up in the 6, 7, 8, sometimes 10 area. And that's a bearish signal, okay? Because what that tells you is any little thing where they need to start adding some exposure back to VIX because they're max short, that's going to that has a tendency to cascade into something bigger. Okay? So what we've seen now is we've seen a melt in VIX, but at the same time, this is still negative. This is a bullish signal. And this is why probably, what McElliott was kind of touching on. Okay? This thing under zero is a bullish scenario because what this tells you is even if you get a pullback, they're likely going to sell volatility and buy SPX, these funds. Okay? Where a lot of times it's the opposite. Okay? So this is the takeaway from this is these pullbacks are likely going to be really shallow because instead of these funds scrambling for VIX exposure, they're doing the opposite of that. And that tells you a lot considering how much we've rallied on the equity side of things. Okay. What else we got here? Oh, these are CTAs here. I just mentioned. Let me go to financial conditions. And you don't really hear too much about this right now. And I'm kind of curious. And, I went back and looked, and that's why I think Powell got heat about cutting rates in September for Biden. Because I looked, I can't remember prior to that the Fed ever cutting rates into extremely loose financial conditions. Okay? If you listen to Powell, his press conference, every Fed meeting, he'll mention financial conditions at least 3 to 5 times. Okay, we know he pays attention to it. That's how he really gets a gauge on whether rates are putting pressure on the economy or not. Okay, and probably one of the reasons why he feels like he doesn't really need to cut here, look at financial conditions. They look like QE was implemented. Okay, the red shows tightening, right? So is this elevate financial conditions tightening? You backtest that. That's bearish for equities. Okay? Makes sense. Logic. When financial conditions loosen, which is a bullish backdrop for equities, you see this drop and turn green. Okay? Case in point, into the tariff liberation day mania, okay, you had financial conditions tighten significantly, right? Putting pressure on risk assets and the economy. But since then, since those lows, look at the move in financial conditions. That's pretty dramatic. I mean, look, this is COVID after the Fed implemented the biggest round of quantitative easing we ever seen in our entire lives. All right? You're talking about a dramatic, really dramatic move here. So, again, these are the drivers. These are the backdrop drivers that a lot of people don't really talk about or take into account, but you backtest these things and you find, right, these type of loose financial conditions extremely favorable for the equity market. All right. Can this change? Right? Can something pop up and change this? Yes. Right. Just like Trump with the tariffs, tighten financial conditions. Right. But until that happens, you're dealing with the complete opposite of that. Okay. Now you can make the argument too, we're getting to an extreme where usually the Fed does something to tighten financial conditions, but you don't see that happening. Right? It's hard to envision that happening. But that's where we are there. Here's Goldman's, just in case you think that's fluky, that financial conditions indicator that I use. Here's Goldman's index. Okay. This is including equities, because they take into account equities in their makeup of their financial conditions index. All right. And this is without equities. It's even more dramatic without the equity rally, which is crazy, right? Because again, the first thing when I see financial conditions loosening as they are now, I'm like, well, equities really rallied hard here. So that's probably making a big dent. But look at this. Okay. Excluding equities, you still have a pretty dramatic move. So this is Goldman's measure, just in case you want to take that, don't have full belief in that one. What else is there that we've talked about? Again, this is not really my bag, but the liquidity backdrop, I'm just looking at lines going up and down and based off correlations in the past. Can these correlations be broken? Yes, they can. Okay, but the probability of it being beneficial or not beneficial to equities is extremely high when these things are involved. And the white is SPX. The underlying is global liquidity indicator, right? The yellow is kind of a trend of that liquidity. And this even takes it a couple months out so you can see, kind of get a look on the horizon, right? Is equity, global liquidity going to start tightening here? Or, is it continue to be heading in the same direction? And you remember, right, we've been looking at this and talking about this now, if not April, which we were, I mean, even let's say May, right? That this is quite dramatic. This is not sideways, right? This is quite dramatic here. And, equities are following suit. The interesting wrinkle is that Bitcoin hasn't really followed suit yet, believe it or not. And Bitcoin even has stronger correlation to these type of indicators. All right. So again, maybe Bitcoin playing possum here before some climactic move. You guys would know more about that than I do. But, I'm not looking at liquidity by itself, right? Over the last couple of months and making the bullish argument. Taking it in addition to everything else I've talked about, right? From positioning to sentiment to everything else. And they're still all in the bullish camp. What else did we look at? Oh, Sharpies. All right, let's talk about Sharpies. Because, again, it's not... Oh, here's the Goldman positioning indicator. All right, we've talked about this the last couple of weeks. You still, with the market equity rally up until last week, this was still in light positioning. Okay? As of last week, with the equity rally, Goldman's positioning indicator was still light positioning. Now, let's call it neutral, right? Let's call it neutral. A far cry from where we were here, February, March. What was that? Oh, Sharpies. This is these are Sharpies commercial hedgers in the futures market. Okay. And up until this past Friday's update, you could see they went from a max short position off the corrective lows to net long in equity index futures. Last week, they trimmed a little bit of that, okay? But what's unusual is that you get an equity rally, right? You get a rally in the equity indexes of this type of magnitude, and they're still net long. That usually doesn't happen like that. The rare occurrence where it does happen like that, what the takeaway from that is positioning is nowhere near an extreme where you would be concerned, right? Sharpies are probably one of the earliest tells on when positioning gets way too out of hand, right? Because they can be early, as we know. But when they start aggressively slapping hedges on, which is normal for them to do as a market goes higher, okay, when they get to an extreme, it tells you that positioning is extreme to the bullish side, right? What this tells you is you're not even close. Right now, you're not even close. Okay? And up until this past week, you had hedge funds were adding shorts to futures. And they covered some of that last week. Okay? Even the retail participation, where retail is really hard to get a gauge on these days. We talked about this because there are more traders now than anything else, right? We have measures of retail sentiment, and they're far from being exuberant. Okay, you can look at fund flows, you can look at survey sentiment, stuff like that. But the kind of the Robinhood traders, the retail traders as we know them, they're really niche players. Like they can be extremely bullish this week, and next week they can be on the complete opposite side, right? A lot of times it's in names where they get extreme, right? Like Mag 7, when Mag 7 was at its heights, they were extreme there. When the semis were parabolic, they were extreme there. Okay? And now I'm sure they're dabbling in, some of these sub pockets that we've been talking about, right? Nuclear, space, OCLOs, those sort of things. Okay? So it's really hard to get a measure on the overall sentiment in regards to that crowd. But as a whole, they're not, from what I see, they're not at any extreme as a whole, right? Because of how they're focused on certain names and more nimble in a sense too. Okay? And you've seen they've been quote unquote right? They've been on the opposite side of pros at times and been right. Example, you had hedge funds that were shorting into the correction, and you had that retail trading crowd buying into the lows of that correction. Okay? But then a couple of weeks after the market rallied, those same retail traders sold into that rally. You understand? So they're more nimble. But as far as entries are concerned and where they've looked to get in and buying dips, as you know, they've been more right than wrong of late. Okay, but going back to Sharpies here, Sharpies have, there's no concern here. There's, again, what I think is even something to focus on in regards to this crowd, the commercial hedger crowd, is any sort of pullback, any sort of sign of weakness, digestion, anything that gets hedge funds and retail to be less bullish than they're already not, right? Let's say they start shorting again, hedge funds adding shorts. You have a shot on any pullback to get Sharpies to a max long signal, right? And that's kind of this. Right? So any little pullback, any digestion we get, and you start reeling in bears again, it doesn't take a whole lot for this to be at a strong buy signal. I mean, that's my takeaway as of right now with this in particular. And this is the breakdown what they've done last week. So they trimmed some NASDAQ, which makes sense, right? That's where all the heat has been. Looks like they added some Dow. But, you know, nothing major, nothing major. What else I got here? All right, so now let's talk again, short term, right? Because that's where you'll see the heat. Oh, here, credit. We always look at credit, right? Credit spreads. Again, you're getting to max tight again. Like you're not going to see credit spreads go parabolic, right? There's only so tight they can get, and they get to an area where they're tight as can be, and they're back there again, right? Pretty much. Here are swaps, same thing. Right? This was an aggressive move here. Right? Kind of the risk just completely taken out of the market. And did I flip this? I didn't flip the other one. I don't think I flipped the other one. Anyway, but you can see, right? Kind of looks like the index pretty much. But again, you get to this point up here, and it's going to be really difficult for this stuff to, you know, get even more bullish in the sense. It's already extremely bullish. What it tells us is right now, okay, as of today, because again, this is not predictive, okay, but as of today, there's no concern at all in the credit markets as far as these signals we're looking at. Right? Whenever there is concern, you'll start to see, and they're pricing in risk, you start to see these things widen out. When there's less concern, they tighten up. And they've been tightening pretty aggressively here. And again, you see it in financial conditions. Okay, so that's another big picture indicator. Here's the BOVA bull bear, a little above neutral. All right, so just giving you guys a sense of kind of the big picture backdrop, because I think that's the most important. I almost knocked the mic off the desk. The most important thing. Now, on a short-term tactical time frame, are things hot? Sure they are. Of course they are. Okay? But again, you want to be careful of what that means to you. Right? If you're taking all these signals into account, right? And that's your thesis, the takeaway from these short-term signals, what plain and simple you want to be a little more prudent, right? You want to be a lot more selective here in what, especially trades, in where you find entries. Right? You want to take spots into more, put more emphasis on where some of these names may be trading that you're looking to get long. Okay? But here we are, short-term composite indicator up near 70. That's pretty elevated. We got to 80 before that little rinse that we had, right? So see, like, here's my point, okay? Like, you get to this, okay? And this is where 80 flashed on the short-term indicator. Makes sense, right? Upside niner, 80. The result of that was this. You understand? That's all that was needed to get, oh, I'm sorry, this here, right? Maybe it was this. I think it was this. But anyway, that's all that was needed to get it from 80 to 42 or whatever that is. Just that. So you just want to be careful of how bared up you want to get off these short-term indicators. Oh, wrong button. Where's the other one here? What I posted? Tactical sentiment. I had to. Oh, wait. I'm going too far back. That's not even the updated one. Hold on. Where'd it go? Anyway, tactical sentiment looks like. Oh, there it is. Right here. That's why. So here's the updated short-term sentiment. Unchanged it was. So same shit. Here's tactical sentiment on sell signal. Okay. So you definitely have short-term heat out there as a whole. Okay. The equity put the call got pretty low. A lot of different. Here's the equity put the call. All right. I think we flashed a 4 handle before bouncing here. All right, so that's where we're at. Again, no major change. Right? I just wanted to kind of get everybody caught up to where we stand big picture wise, because I think that's the most important. And like I said, just a reminder that you just don't want to. Again, the best way to put it is get too cute. You don't want to get too cute, right? And that works both ways. You don't want to get stupid and too aggressive, right? Because here's the thing too, and this is the way I'm looking at it. With what I've shown you today, okay, the way I'm looking at things is that there's still a lot more to take advantage of as a bull. Okay, so you don't want to get too aggressive and chase short-term heat, and any little pullback like this ends up screwing you and getting in the way of kind of that big picture thesis, right? You want to be smart about things. So I'm not just talking about being bearish and trying to find a short here. Right? I'm saying too, as just the same on the bullish side. Okay, we want to be prudent about things, at least the way I look at it. I want to try to take advantage as best as possible as this big picture setup, as opposed to micromanaging and try to figure out the direction on a minute-to-minute to day-to-day basis, right? When the backdrop is not bullish, that's when I'm focusing on trying to find these short-term moves to bide my time to get to a more bullish backdrop, right? When the backdrop is bullish, right? That's where I want to try to take advantage of that big picture setup as much as possible and let that work for me, as opposed to some of these, day-to-day gyrations, if that makes any sense. All right. Oh, and one more thing that I wanted to mention to you, which we've talked about quite a few times, and especially kind of with the McElliott note of recent and a lot of talk regarding that. I think VVIX is a great signal for us for this current time, for where we're exactly at in this market, okay? Because kind of what McElliott's talking about, you have the potential to see a vol up, spot up move here, meaning VVIX and VIX work their way higher with equities, okay? But at the same time, the longer that goes on, right, the longer that divergence goes on, the more of a problem it becomes when that rally stalls. Okay? So what I mean by that is, if we start to see that divergence last for multiple days or weeks, okay, that is going to be tipping us off to when this momentum runs dry, there's likely going to be a pretty decent rinse and pullback, right? That's how those things play out. But as long as these VVIX divergences get kind of rinsed out on a short-term basis, then this melt up can continue higher, right? So that's kind of what we've been seeing up until this point. Again, I can't predict the future, but we'll see how that kind of shakes out from here, right? So this is kind of what I'm talking about here. Okay, so you see VVIX here kind of curling higher. All right, if this equity move continues this week, let's say, and you get VVIX moving higher with it, okay, you really want to be careful about how much new risk you're putting on into that, right? So that will be a reminder. You may want to be more nimble. You may want to take those profits a lot quicker on any new risk you're trading, right? You may even want to trim some of the stuff that you're in that's gone a little bonkers, okay? Knowing that the resolution to that is going to be some sort of pullback and rinse. Okay. In my opinion, the longer that divergence gets ignored and goes on, I think the more violent that pullback will be. That's the way I kind of look at it. All right. But again, if you get, and what we've been getting more of is you get VVIX up, equities up, but then you get a down day tomorrow, and that kind of washes it out in a sense, right? Then you start fresh, right? You start anew there. And we had a little bit of that recently, if you remember. Where was it? We were just talking about it, and you had a little bit of a pullback, and it kind of washed itself out. You know, even on short-term time horizons, you could see it if you're looking to trade them. Hold on. I had it hourly, didn't I, or something like that? I have my, oh, I can, here. Why don't I just do that? It'd be a lot easier. All right. So if I'm seeing VVIX move higher with the equity markets, what I'm going to remind myself of is not to get caught up in that excitement, because I know ultimately that's not going to be a good thing. All right, so I inverted here. Let me see. I get confused myself when doing this. So now this is inverted. So this should move with, right. Okay, so here, okay, this is what I'm referring to. Equities up, VVIX up, right? Then VVIX, I inverted it now, right? You see how VVIX kind of diverges on this chart from equities? Right? It kind of just tipped you off to this. Right? And then stay down, and then now you might have a similar setup here. Okay? If this starts to head lower, it's tipping us off that you're going to get some sort of rinse. The quicker we get that rinse, the shorter, the more shallow it could be. Does that make sense? I'm not muted. I don't think I'm muted. Yeah, some people, the rest can hear me. All right, thank you. All right. So again, it gets a little more confusing when I invert it, but I'm hoping you guys understand what the hell I'm talking about here. Okay, because this is VVIX inverted here. So what this means is this red line means VVIX was going higher while equities were going higher for a couple days, 2 days. But then equities, if you want to call this a pullback, right? We had a little bit of a pullback here. This was the conflict, the Iran conflict. Can you believe it? Can you believe it? This was nuclear world war, supposedly. Right? So you had almost like the VVIX tip us off to that little Iran conflict. I mean, it wasn't a secret, but this Iran shit. You know, it wasn't a secret. So again, so something interesting to watch this week, right? And here's how I'm approaching it, right? If VVIX trades higher with equities this week, okay, anything new I'm playing, I'm more than likely not going to hold until that VVIX divergence resolves. Plain and simple. Once it resolves, case closed. Right? Because what I'd rather do is wait for that pullback whenever it shows up and try to take advantage of that. So that's why I think it's a pretty good thing to keep an eye on. Now, you know, who knows? You may get vol up, spot up for a couple weeks or however long it lasts. But again, that's going to be a problem. Okay, doesn't mean the apocalypse, but you more than likely going to get some sort of correction, right? You may get a 5 to 8% correction if that happens. We still, with everything where it is right now, that's still, we want to look at that as an opportunity to add long exposure. Right? But pullbacks are normal. All right, so I just wanted to mention that because you guys hear me talk about it and bring it up in the steam room quite often. I think it's just a good reminder of where kind of everything's at in real time. All right. Name-wise, let's talk some names and then kind of wrap it up here, 7 o'clock. The action in names has been better, okay? And what I mean by better, we're not getting a ton of fresh buying in new names, okay? That's obviously been a problem for quite a while now, all right? But there's been some of it, especially on the more speculative end of things. But even the action in some of the other stuff has been more aggressive, right? I can give you an example. Even Friday's action, okay? Nowhere near a new name, okay? We've seen bull flow even recently in the name Amazon. But you had some really nice-looking appetite of buying come in Friday afternoon in these July 11th calls. Okay, so why I think that's a plus, obviously, is if certain names consolidate or pull back, or you like the setup and they're seeing this clean, aggressive buying, right? You got even trades, decent setups for trades in even just repeat names, as opposed to just continuous rolling or weeklies, right? A lot of times, in other words, what you'll see, or what we usually see, is we see Amazon buying, but they're buying weeklies. You know, they're buying weeklies, and we don't even know if they're going to be in them tomorrow, right? That's what we usually see a lot of times at Tesla, for example. You see a ton of weekly action. So this is good. The more we see of this type of action, for conviction, for confidence, even in just trades and repeat names, I think it adds to the conviction side. Okay. Other than that, we're seeing, a lot of, again, these hot areas seeing the best of buying. Okay. And even these older repeat names, they continue to see the best of flow. All right, there's rolling involved, obviously, but you got names like Hood, right, where they just still tattoo this thing. There's a lot of rolling there, but they're still annihilating it. Names like SoFi, right? Names like that. So existing names that have seen flow continue to see flow, and it's basically nonstop in some of these things. Okay, but there have been a few new names and setups, especially, like I said, on the more speculative end of things. I've traded a couple of them. The more recent batch have been good to me. Prior to that, I told you guys on the last Thursday webinar, I ran into a couple of scratch trades and a couple losers, but overall they've been good, as you guys know. I mean, a lot of you guys have been playing more of these things than I have. A couple of recent ones for me that I've traded, this Banksy, which I sold really early, story of my life, but really nice move. What I trade recently, PL. I left some of the PL. I sold Friday. I bought on Thursday, sold it on Friday. The Pony, you guys know that. I traded that. I left a little behind of that. So what I've been doing, a lot of you guys, as I told you guys, a lot of the more speculative names, I'm trading, right? That the fundamentals aren't there. I'm trading, and if I like it a little more than the next speculative name, I'll leave some behind. The more I like it, the more I'll leave behind. Case in point, like this, Rocket Labs. Oh, here's another name, by the way, flow-wise. It's just ridiculous. Ridiculous. Like, for me, I wouldn't even be looking at a name that looks like this. You guys know me, right? Like, this egg has hatched and then some, right? Even the secondary entry here is long gone. But the buying is so aggressive in this thing that at short-term spots where there's a little bit of a breather, like case in point like this or like this, I'll look to trade it. All right. So what I did is I bought some here and I sold it into this rip. I didn't leave any behind. And here I bought and left a little behind, but I sold it on Friday. I still have some left, but not as much. What I'm saying is I left a little bit more behind of the Rocket Labs because, the flow has been that much better in it. But it's more of a opinion and personal preference than anything else. Ideally, what I am looking for are names that are catching this type of action that are a little less speculative, all right, to hang on to. But I have no problem trading any of this stuff. A name that I bought some of and looking to add to, Sahil, I think it was, who brought it to my attention, and then it caught some Jan buying, is this post-IPO, Voyage, VOYG. So I bought this on Wednesday, last week. I don't remember. Somewhere over here, popped. I didn't sell it. Friday, gave it back, and then some. So I'm still holding on to the first batch I bought, and if they hit it again, I'll definitely hit. I'll definitely hit. I don't know necessarily if I'm going to trade it or hold on to it. We'll see. More than likely, if it gets to upper 50s, I'll probably sell the bulk of it. But who knows? We'll talk when the time comes. But I'm definitely interested in adding to this name. The good-looking action that was involved was out into January, so some time. So, I'm trying to be a little more patient with the next tranche that I add. But definitely, space definitely has my interest, as you guys know, post-IPO. Some in the room are buying Chime. There's been some bull flow, nothing really that caught my eye sweeper-wise, but there's some bull flow there. I haven't bought it yet, but looks good. Looks good. What else? I'm trying to think of any new names that anybody catch this? I only had a little bit that I had behind. Anybody catch this on a nice full trade? Cores? We were just talking about these names too. These Bitcoin miners, yes, I know I talk about them way too much than they deserve. But, some of these names have really lagged significantly. And, what I'm looking for is I want them to catch that real buying that kind of got our attention the first go around instead of the more speculative buying they've been seeing. But a lot of these names, from a Hut, Wolf, choose your poison. Here's one of the better flow names here, Irene. And it's been moving recently. All last week, they were buying this thing. And it looks pretty good. All right. So there's been some interest in that space again, that pocket. Closed course. Oh, I think you mentioned that. Somebody else mentioned that. It might have been you. That sucks. That's going to happen, though. Yeah, it makes you feel worse because of the news, right? But, look what I did here. Look, I sold this probably, who would sell it here but me? But I'm just trading these things, where did I sell? Did I sell here? I sold here. Not here. Here. I sold this pop right here. Okay? I bought it here. So I sat through this, because I like this. I like this, right? As opposed to right? Like that's kind of what I like, that in this consolidation, they were buying it. Okay. But as soon as it poked its head out, I got out of it. Like that's stupidity, isn't it? Even for a trade, you finally bust out of that. Yeah, that's not the smartest thing for me to do. But if it makes you feel any better about the cores, 2 minutes, I don't know if that's going to make you feel any better, but I'm trying here. I'm trying. But it's going to happen. It's going to happen. There's so many of these little guys that are seeing momentum, and especially the way we play these things, if you play enough of them, you're bound to make the wrong move. You're bound to make the wrong move. I'm trying, Dimitri. I'm trying. But yeah, this was, and this is one of those names, just nonstop buying, but everywhere. The stock is up, you see buying. The stock is down, you see buying, you see put selling, right? It's just from this point here, non-stop action all over. So it makes it a little difficult to kind of pick spots, right? It's a lot of luck involved. That's what it is, Dimitri. Net, that's just a good looking name, period, right? Like, look at it. This thing is already, look at it. Yeah, this is a good looking name. If anybody's in this name, you don't sell this, even if you get a pullback, you try to ride through it. If you're up really nice, roll, you definitely want to hang on to some. But yeah, it caught some good looking leap action too, this net. Caught some good looking leap action. So a lot of these things. Net, right? So that's kind of one of these familiar names that they've been buying off this recent pullback. November calls in a couple different spots here. But they've added to November's. So they've kind of been buying pretty much this whole thing here. And it looks like it's getting its act back together. Right? The run was just ridiculous. So you had that correction, and now it looks like it's working its way back. Right? Like, look, all these VST, look at that. All right, VRT. Look at, they're all working their way back. Again, like some of these names now, just because you got Niners here too. I preferably, if we do get vol up, spot up this week, and it leads to a little pullback, that pullback is where I would look at these things. You want to be a little more careful in this stuff that's come a long way. You don't want to take new entries into vol up, spot up, because what happens? You get these, you remember it was DeepSeek, I think was the reason why. You get these cockamamie excuses where they just sell off for a couple of days, right? They were overdone to the upside. And you get these 2-3 day corrections, and if you like them, you buy them. That's what you're looking for. That's what you're looking for. Oh man, that thing's been a beast, right, Theo? What a beast, IBM. Beast. Yeah, the banks, Wealth Legend, we're talking about like some of these tech names, and they've been the hot spot for a while now. These banks quietly, like nobody has any interest in them, and they look really good. Look at this. Okay, this tells you a lot right here too, right? With everything going on, Middle East conflicts, whatever it was, JP Morgan had a nice bounce off the lows, and look at this. There wasn't a seller to be found here. Like nobody wanted to get out of that stock. You couldn't draw a straighter line of consolidation. Right? Nuts. So that kind of was just telling you right there that These things are pretty bullish. Goldman, look at this. But it's been a lot of these, like the handful of bank leaders that, especially flow-wise, have been the focus point. And kind of to your point, right, we started to see Schwab, the buying pickup, Capital One Financial, which looks good. What happened? I just broke my trading view. Oh, there it is, right? So this kind of like busted out now. But, you're at a spot here where just look really good. Look at this. A lot of people are wondering whether it's going to start to trickle down to these guys. Now, this, they've acted better, but this is kind of this housing rate cut cycle. It's all tied to that. All tied to that. But they, would it shock you these break out? I think it's coming. It's a matter of when. Oh, to that point. So you guys know what I've done, especially because I couldn't find a name that I really liked to, take some size in. I've been trading a lot of the names. So what I did to not get frustrated, I played some of the ETFs, right? I bought Soxel and TNA, and that's the one I want to talk about. What I'm going to try to do is get my hands on some decent small cap exposure. That's my goal. Okay. Again, not for a trade. The goal is to try to catch that breakout of small caps as a whole. Okay. So very similar to, right? Gold miners, if you remember, I played that one time. We've discussed, right? That type of trade. So I have some TNA that I'm holding right now. Whether I add TNA or I buy some IWM with time, that I got to figure out here. But that's one of my goals from here, right? The group has been lagging. And listen, I get it. Every guru and expert has been calling for the breakout small caps for ages. Okay. So I know it's not an easy trade, and I know it may take time, but I'm ready to get involved. I'm ready to get involved. So I like this setup. We already see more speculative, but a lot of the smaller names catching a lot of interest. You have a couple of things go right that we talked about, and I think you get a chase in small caps. It's a matter of when. So that's where, you want to give yourself time. Okay. But even right now, like positioning wise there, I posted the chart. You're in good shape here. You're in good shape. Yeah, I was thinking about buying that VIX for Bitcoin, but more of I'll trade it if anything. Yeah, I'm not a Bitcoin guy. You know what I mean? I'm not a Bitcoin guy. I don't know what the hell goes on with Bitcoin. But small caps are my bag, So I've been looking my chops to kind of get some small cap exposure for a while. It wasn't quite there yet. And, I'm there now. So again, if you get kind of those things that haven't really flipped in this market, that's what is needed. You get sentiment improving, consumer sentiment, stuff like that. Usually bodes well for small caps. And I think ultimately this, like what we've seen, and again, people forget about it because of all the noise, but I think it has like that Trump trade involved in it, right? So once people start to forget about the tariffs and all the negative that Trump brought, right? again, the opposite of what we were seeing before he got elected. Everybody was pricing in all the good for Trump and forgetting all the negative. Now, right, into the correction was all the negative and forgetting all the good. This America First, I think, has small cap breakout written all over it. So I like what I see there, and nobody's there. Right? Everybody who tried to play it failed. Right? You got a lot of frustration there. Nobody wants to be in these things. They think the small caps will never break out. All right? So you're kind of on a sentiment front. You're there where you need to be. Right? You remember? I don't need to mention names. You had some gurus really stick out their neck and saying, "Oh, the small caps are going to lead," and never came to fruition. A lot of people trying to catch that trade. I think now is, really quiet on that one. It's really quiet. All right, everybody's focused on AI and more established names, and I get it, but I like that as a setup in the small caps. But again, if it happens sooner than I think, that's great. Fine, as long as I get my hands on some. But I'm prepared for it to take a little bit of time because I'm going to give it a leash. It's not a trade. I'm not looking to just trade it. I want to get my hands on a decent amount and sit on it. So I just wanted to bring that to your attention tonight. All right. Anybody else have anything to add? Sahil's talking about some of the software names. They all look good. I like Now. Sahil, I love Now. I think Now. Yeah, shorter term, I don't know. You got a nice little breather here off that run up. But this is quality. This is as quality as you're going to get now. Salesforce is up there. I just like Now better. I like Now better. I like the CEO. In the AI world, he's in hot and heavy. You know what I mean? This guy doesn't miss a beat. I like Now. I like this name a lot. VRSN, that's another quality name, right? That's another good name. Oh, man, look at this stock. Yep. Ready to go. This thing's already been going. Look at that move. It's already up $100 here this year. That's a nice move. Yeah, there's another quality name. Really looks good. Look at the numbers. Solid name. So these names, these are all names. Well, Now I think the setup in Now is a lot more appealing as far as not extended. Some of these things you got to try to buy off pullbacks, I think. This thing's gone vertical here. Can it continue? Look, we've seen it do it in the past, but this is quite the move. Lemonade, what's that been up to? Let's see. This is a big short position. That doesn't look that bad. That doesn't look that bad. You like this thing, Max, huh? Is it you? You've mentioned it a couple times. Had a nice little move here too. There's another name. Oh no, Lemonade is insurance, but not health insurance, right? This name has seen a ton of action. You guys know this name? Oscar the Grouch. Anybody know this stock? Max, Lemonade, if I'm not mistaken, is heavily shorted too. So if it can build some momentum, you could get a violent short squeeze in that Lemonade. Does it make any difference we are in a weekly niner? Nah, honestly, like what difference? Like to what? To end of a bull trend or a breather? That's kind of the problem here. That's kind of the problem here. All right, so let's look. Okay. Here, you had a SPY niner. You had a pretty decent dip here. Okay. That's fine. Here, you had a SPY weekly niner. You dipped for a week or two and then ripped crazy. Here you had a SPY niner, you ripped for the next 3 weeks through it, and then had a little dip. Here you got a SPY niner, you had a little dip, and then higher to another niner. This one you could hardly call a dip. So like what? This is kind of what I was talking about earlier on in the webinar. What's the plan? You understand? Are you going to start sizing into shorts? Like, is this? Again, you're talking to the wrong person about this stuff. You understand? Like, you show me a chart like this, and I don't see any short entries here. You understand? I just don't. I don't think, for me, depending on how you approach this game, okay, but for anybody who's especially new to this game, why would you focus any of your time and energy on any short side opportunity here? Shouldn't you be more focused on long side off any little dip you get off that instead? Right? Maybe you get lucky and maybe you get something like this. If your timing is impeccable and you are able to sit through the squeezes, which is impossible to do. I don't know anybody who could do it. Impossible. Right? That's if you have a horseshoe up your ass and you time it perfectly. Okay? If not, you end up with something like this. You get a little shake for a week, you don't get out, and then you get trampled. You understand? Like, look at here, too. Look. Niner, little dip, right? Couple weeks. Niner, no dip at all. Another niner, down week. Then up again. Niner, a month and a half later, then a dip. Like it, I don't see it, you know. Now here's the difference. Okay, here's the difference for me. If any of these niners, okay, if this niner sets up with positioning full all in, right? So now if you're telling me we're on a weekly niner and hedge funds are all in, CTAs are max long, vol control funds are max long, right? Kind of the setup we had at the end of February, March. Okay, then your argument for the niner makes sense. You understand? Then it makes some sense. But with the positioning backdrop as it is right now, I just don't see the appeal there. Okay, not that you end up being wrong. I could be wrong, right? Something, Trump can come in tomorrow and implement tariffs on everybody and their mother again, and you happen to time it right? I mean, that's the market. But I'm talking in probabilities, right? And that's how you got to look at this game. The probability of success trying to catch any sort of down move off that is not in your favor. Not in your favor. And I think on a short-term basis here, if you're bearish, the one thing I would keep an eye on is that vol up, spot up move. Okay? If you get a scenario where VVIX trades higher with the indexes for multiple days or this week, whatever, okay, there's a good chance you're going to get some sort of nice rinse at the end of that momentum. Now, trying to figure out the timing and the spot for any short entry, good luck. I'm being honest with you. Good luck. I can't do it. Right? I rather, if I feel uneasy about things, like they've come too far, or again, if we get the VVIX divergence I'm talking about, the takeaway for that for me is just be careful not getting caught up in the FOMO and adding new risk into that. Plain and simple, right? If it has you feeling uneasy, trim some long exposure and stuff you're up. But to take it to that whole other side now and to get short, I mean, you see what they do to bears in this game, man. It's not fun. It's not fun. I don't know how much more evidence you need out of this game to convince you that the short side is a effing nightmare. Like, how much more evidence? You know, you have Drunken Miller himself telling you the short side's impossible. Forget it. Don't even talk about it. And yet people still want to swing short positions. Quite amazing. Quite amazing. But yeah, and again, this is not a rant into you, Gaurav. You know, I'm hoping I'm making you see why I can't even look at the market through that lens. All right. The only way where that weekly upside niner will really have me concerned enough is if positioning was full. You know, then I would be singing a completely different tune like I was in February. All right. I get thrown in the perma bull camp, right? A lot by trolls. And, you know, you guys heard me and my tone in February. It didn't sound all that bullish. You know, so I think that matters more. But can we get some sort of quick little rinse because we're overextended? Yeah, no doubt. But I'd rather be ready to try to take advantage of the opportunity that sets up on the long side off of that, right? As where things stand right now. Yeah, Chanos loves it. And again, you know, if you actually heard the Chanos story, the short side, it would give you nightmares. You know, if you heard Chanos in an interview talk about running his book on a day-to-day basis, you can't sleep at night. You don't want to do that. You know, he spent the majority of his day hedging shorts because he's getting squeezed to death. That was his job every day. Getting long, hedging shorts. You know, and it ultimately, you know, again, he's one of the sharpest guys on the street. It drove him out. You know, it's a tough game. And now you got the Fed rigging the game, right? You got the Treasury rigging the game. It's a rigged game. That's the problem. If you were dealing with a normal free market, it's a different story. The game is rigged. You know, the game is rigged. That's the difficult part. So yeah, I mean, Gaurav, I hope that answers your question. You know, yeah, exactly. If that niner lines up with other things that is making me nervous, more so on the positioning sentiment side of things, it offers a lot more credence. You know, but you know, I've seen way too many of these niners, especially in bullish setups, just get run through. You know, I'm showing you right here. All right, there's no real takeaway from this. So that's the problem. Yeah, you do get ulcers, is right. Yeah, puts, you're gonna have that's a good Chuck. What you just said is exactly it. Like, if first of all, if you're going to play the short side, you can't short equity, right? You got to buy puts and you got to put in what you're willing to lose, period. Right? So you risk your premium. And it's a bet. It's a speculative bet. You got to treat it like that. But the bigger point I make is that's not the damage the short side does to you. What it does to your bias does even more damage than the money you lose on those puts. Because now you're short, okay? You have a bearish bias, okay? Now, when that momentum in the market turns, now you not only do you lose your money, but now you got to switch your bias from being bared up to now bullish and getting long. There's not many people who can do that. I'm telling you from experience, it's not an easy thing to do. Especially when you start making a little bit of money on the bear side. So let's say you bought some puts and you made money, and now you bought some puts on something else, and you're looking to make money again to the downside, right? The more you build up that bearish bias, That's where people get creamed in these corrections. They make money shorting. They make money on the put side in shorting. But ultimately, they build up such a bearish bias that they get run over when the market flips and squeezes, and they can never get long because they were so bared up. You see, I mean, I've seen bears damaged on, I'm talking about from 2009 lows. They couldn't get bullish for a decade off the 2009 lows. A decade. You know, this game is rough emotionally. Take my word for it. Does a lot of damage to those brain cells. A lot of damage. You know? So yeah, if your approach to the game is, you know, kind of again like gambling, DraftKings, you know, whatever, that's a different story, right? You're placing bets up, down. It's, you know, you're betting, you're gambling, it's speculative, and you're treating it as such. But you know, if you want to hang around this game long enough, you know, focus on the long side, master that first, and then ask yourself if it's even worth focusing on the downside at all. But get to that point first. You know, this game's hard enough. Yeah, this game's hard enough. What else we got? Yeah, so you're talking about the software names. They look interesting. Software as a whole, you know, that's another thing, right? Let's talk about that a second here, and then I got to run here because it's 7:30. You know, you have like software. If you look at positioning in software, you would think you're in a 5-year bear market. That's what positioning looks like in software as a whole. And look at it. Oh, wrong. What am I? IVZ. What's the I? Wait. What's the software sector? I'm drawing a blank here. IZV? What's the software ETF again? How did I forget it? Oh. Nah, it's not going to show up like that. It's IVZ. Is that what I hit up? No, not IVZ. I did it again. IGW? IGV. Thank you, Chuck. I can't. Whew. There we go. This is it right here. This is what I was talking about here. So you look at like the software positioning measures, especially amongst hedge funds. You would think it's been in an unbelievable bear market. And, you know, this thing is ready to bust out the new highs here. So, again, just shows you positioning nowhere near where you would expect it to be in some major things. That's why I think like some of the names Sahil's talking about in the software sector, you know, you got funds that start to put on exposure in software. All these names are going to get bought. Now, Salesforce and Snow, which is already being bought, you know? It's already being bought. So, again, it all bodes well, especially off any little digestion that may show up. You know? VGT, is that a software one too? VGT. Oh, this is tech, not just software, tech. The Vanguard one. Yeah, Sahil, they're software compared to semis is almost as extreme as, remember we were talking about the setup? But it's even worse because they're not as long semis. They're just even more short software. Incredible. So yeah, software looks good as a whole. Software looks good as a whole. The one thing I would say about sectors, though, that I've had trouble with, because of these little niche groups, kind of confusing. It gets confusing, with sectors as a whole. Like financials, what's in that category these days? Tech, forget it. I don't, tech is, put it this way, like if you look at overall tech exposure, let me show you guys, right? If you look like overall tech, positioning is not bullish at all. Wrong one. What did I do? Oh, here it is. Okay. Well, here's mega cap growth in tech here. Like that's overall positioning in tech. They've been secluded, like focused on just certain names. Again, those niche areas. So it gets a little confusing with these sectors at times. But 10 is software, right? Like here, that's a good perfect Dimitri, like this, right? By the way, this looks really good to me, TEM. But the point I'm trying to make here is like, is this healthcare or is this tech? It's kind of both, isn't it? Not right? Isn't it biotech and AI? So this is a great example, Dimitri. Great example. Perfect example. That's exactly what I meant. Right? So it gets a little confusing trying to look at these sectors as a whole. Well, that's what AI will do for you. I remember we had that trouble with the internet boom too. Everybody was adding .com to their name, so same shit. But yeah, it's funny you bring this up because I think this is going to have one of big weeks, like one of these jammies. Yeah, so we'll see, but it looks pretty good. TEM. It's kind of playing possum here. ADSK. I haven't looked at that stock in a long time. Let's see. Yeah. Oh man, looks good. That's another software name, right? There you go. Yep. All right, guys. I'm going to let you enjoy the rest of your Sunday. Again, let's take each day and week as they come. We got a short holiday week ahead of the 4th of July, so liquidity is probably going to be thin. You probably get some decent movement this week. You should anyhow because of the thin liquidity. But there should be decent action this week. One, these weeks are known for that speculative type behavior. And two, you got some big job numbers this week that a lot of eyeballs are going to be on. So it's going to be an interesting week nonetheless. And again, I think VVIX, keep an eye on VVIX. We'll talk about it, obviously, in the steam room throughout the week. But I think it'll be a nice tell if we have something to end up worrying about on a short-term basis at the end of this week or not. So let's see how they play out. All right. Thanks, everybody, for spending your Sunday evening with me. Enjoy the rest of your night. And I'll see the majority of you mañana. Have a good night, everybody.